During my last update video back in June, my portfolio is valued at £10,844 and it had been sat there for about 6 months. No matter how much I'd continued to invest, the market continued to lose me cash over time. This is something that all investors have to get used to, especially during a market downturn or a bear market run. Now, I'm quite fortunate in the sense that my capital investments are fairly large as a percentage currently of my overall portfolio. So the money that I've been putting in has been cancelling out those losses. And as my portfolio continues to grow, market downturns will continue to affect the value of it more substantially, or at least more visibly, because of that factor. The current value of my portfolio has developed somewhat because it's been a fairly positive month throughout July so far. There's been a slight recovery, I guess you could call it. So my overall portfolio is currently valued at £11,470.66, with a current personal rate of return of 27.20%. Both of these are up fairly substantially since the last update, and that's something that I'm quite pleased with. It's never nice to continue seeing your portfolio decline over time, but it's been the case over the last 6 months. So yeah, nice to have something positive to talk about for a change. You'll notice that my largest holding, the S&P 500, is now far more substantial than it was previously when it was sat at around £4,000-ish. And this is because I have finally, after many months of talking about it, sold out of the Life Strategy 100. This fund has been amazing for me, and it's essentially the fund that showed me that investing is accessible to pretty much anybody. It was the first fund that I invested in, and it gave me the confidence to continue to invest through Vanguard and essentially build the portfolio that you can see in front of you now. It's just one fund that I invested in, and it gave me global diversification, which meant that there was very little thinking I had to do. I could just put cash into that every single month. Of course, my use of this fund has now subsided, and if you want to know why and exactly how I reallocated those funds, you can check this video up above where I talk about exactly that. So the S&P 500 is now 47.47% of my overall allocation, which is getting towards that 50% that I'm targeting, but more on that a little later. You'll also notice that my ISA allowance is still £19,600, and that is because over the last few months, I haven't been able to invest as much as I would have liked. This is because I've had a few fairly large expenses that have just had to come first. I'm all about paying yourself first and investing cash before you spend anything else every single time you get paid. But by not investing so much within the first few months of this financial year, rebudgeting and then reallocating the cash, I worked out that that made the most financial sense for me in the short term. So that's why you can see the portfolio hasn't had that much cash invested into it so far this year. I'm still, of course, targeting investing £4,000 throughout this financial year. So hopefully that's something that I can still stick to. Obviously I need to invest another £3,600 before the April the 5th or April the 6th of 2023. But I think that I'm more than capable of doing that. So watch this space. If we scroll down and have a look at the last transactions down here, we can see actually where that capital went when I sold out of the Life Strategy. So we increased the records per page down here to 10, and that will show you everything that I've done recently within this account. So you can see down here this Life Strategy 100, I sold 6.3 units of the fund on the 14th of July with a settlement price of around £276, and that gave me £1,743.58 of capital back into my ISA. And that was then reallocated, as I discussed within that video I mentioned. I put 7 units into the Developed Europe ex UK, 5 into the emerging markets, 5 into the FTSE 100, 5 into FTSE Japan, 4 into the Developed Asia Pacific ex Japan ETF, and then 14, the largest allocation, to the S&P 500. And because Vanguard doesn't allow fractional investing in its ETF funds, I had some capital left over. And this is capital that I'd allocated to different funds, but of course it couldn't buy me a full unit. I then put another 3 units into the S&P 500 and then another 1 unit into the FTSE Developed Europe ex UK. From the main screen then, we'll do what we normally do and we'll check the performance of my portfolio over time. You can see that so far throughout the history of this portfolio, I've invested £10,145, which will likely be similar, or it is similar, probably exactly the same actually, to what I'd invested this time when we looked at it last month. This has returned to me £1,325.66, which obviously equates to the overall value and the rate of return that I'm seeing. And you can see what I'm talking about trading sideways since kind of November, December sort of time. It's kind of flatlined a little bit after this nice growth that we saw throughout my investing journey so far. We've had a few pullbacks, and in essence, the reason why it looks like it's traded sideways is because, like I said, my deposits are matching what I've been losing every single month. We've got £672 in current invested gain or loss. So that is unrealised gain or loss at the moment. That's in my investments currently. From my investments sold, so through selling the life strategy and a few other bits and pieces, I've actually locked in £341.41 in profit. So that's in capital gains from investing on Vanguard since May of 2019. My gross interest is 33p, which is still probably better than I'd see in any bank account. Dividend income, I'm now up to £336.40, so I made around £93 in dividends throughout June, which is just money from holding on to these funds, so that's really, really pleasing. It started to snowball now. You can see every single quarter it's definitely increasing now, which, yeah, it's really nice to see. It shows that I'm doing the right thing. And then fees, I've paid just under £25 in fees in the 3 years and 2 months that I've been investing. Now, of course, in the last video, I said that every single month of the financial year so far has been in the red. And you can see that if we look here. So April, May, June, I'd lost pretty much £950, which, yeah, wasn't really great. But you can see July has been a far more positive month, with the market returning to me £444 and 68 pence, plus that dividend income and that little bit of interest of £93 in total. So far, bearing in mind there is still a week left of trading in July, so who knows what could happen. So far, I'm up £537 and 68 pence. And that pretty much makes up for May and April, so both of those poor months, and a little bit of June as well. So I am still down so far this financial year, but this month has definitely been a positive. I don't by any stretch of the imagination think the worst is over, and I think towards the end of 2022 we could see another sharp decline. However, this is positive news. The important thing is to continue to pound cost average into all of my investments as much as I possibly can. And you'll notice that April, June and July so far, I've not actually invested any cash for the reasons that I mentioned a little earlier. But that is all going to change, of course. So you can see the life strategy, I've currently got a closing value of £0 and 0 pence, which means that I've got nothing invested into this fund at the moment. And you can see actually this fund made me a 30.65% return, or £336 and 34 pence. The FTSE emerging markets, I'm currently up 2.32%, or £18 and 86 pence. The developed Asia Pacific ex Japan, I'm actually up 23.41%, or 86.69. Developed Europe, I'm actually down 7.9%, or £52. The FTSE Japan, again, I am down around 5.6%, or 30-ish pounds. Both the FTSE 100 and the S&P 500 are up for me, and the best performing funds currently within my portfolio. The FTSE 100 has netted me a return of over 30%, or around £250, and the S&P 500 a 47.68% return, including the dividend, equivalent to £743 and 36 pence. We'll break it down even further so you can compare your current holdings to my current holdings if that's what you want to do. So we'll come to the holdings section and click on the detailed view over here, and that breaks down exactly my unit holdings in each of the funds. The emerging markets 36, the FTSE 100 53, developed Asia Pacific 32, the developed Europe ex UK 40, developed Japan or Japan 37, and the largest holding I've got, of course, is the S&P 500 with 87 units. In this section as well, we can also see how my current allocation meets my target allocation. So we'll bring this onto screen right now, the target allocation of my 6-fund portfolio that I've of course discussed on several occasions on the channel. We'll work down the sheet here. So the S&P 500, I'm targeting 50%. You can see currently I'm at 47.47%. The FTSE 100, I'm targeting 10%. You can see here, this is where I am kind of overexposed at the moment with regards to my target allocation. I currently hold 14.7% within the FTSE 100. So that is something that I'm going to look to reduce down, or just not invest into it for a little period of time, whilst I'm increasing my S&P 500 allocation. The other one, which is a little bit skewed, is the developed Europe ex UK. I'm targeting 12%, and I've currently only got just under 10%. So again, I'm looking to increase that a little bit as well. The emerging markets, I'm targeting 15%. You can see I'm pretty much on the money there at 14.41%. The FTSE Japan, I'm targeting 8%, and again, I'm pretty much on the money at 7.81%. And then finally, developed Asia Pacific ex Japan, I want 5%. and I'm at 5.70%. So largely my portfolio is in the right sort of place at the moment, albeit those three that kind of need tweaking ever so slightly. So my overall portfolio is valued at £11,470. And whilst we've seen a fairly positive July with the stock market seeming to recover, I still think that there are some bad times on the horizon. So why don't you check out this video next about why exactly not to worry about a stock market crash. I'll see you there.